Hey there, everyone. Welcome to this morning's edition of the NBC Markets Morning Call, 29th of April, 2026. Stocks faltered overnight as there was just broad concerns around OpenAI. There was a report released that essentially said that their CFO was very concerned that they wouldn't be able to, if revenue didn't increase rapidly, they wouldn't be able to, keep up to their commitment to spend overall. Obviously, as well, oil prices weighing on the broader market. Although US media and US press and US investors are, to be honest, not really talking about it at all these days. It'll only be a problem when it becomes a really big problem, which I'm pretty sure will be pretty soon. We did have Goldman Sachs overnight actually come out with an upward revised oil price, or WTI long-term, short, medium and long-term prices, and also a revision down, and basically saying that the market is a sell here at the moment, and then they expect a significant dip over the course of the next couple of months as the economic figures come through a little bit dented from that extra consumer budget being taken up by gasoline and electricity and that inflation as well. But look, semiconductors have been the big show. We were off again last night in that semiconductor index. But you can kind of see here, it's been an absolute tear. They've accelerated their outperformance in the last, since early April, basically. It really has bounced up pretty hard. So this is the SOX index, or the Philadelphia Semiconductor Index. Which wasn't broadly quoted until just recently. But obviously you can see why. That's a massive that spike up there since April is a massive outperformance of the index overall. And that's all of these companies on the left-hand side here on the market map. I'll say excluding Apple, for instance, but Nvidia cooled off its highs, but there's some big calls going on in Nvidia at the moment. You got Broadcom there, AVGO down 4%, Micron down 3%, AMD down 2%. So a little bit of heat coming out of those, but I dare say be due to you've got the hyperscalers, or 4 or 5 of the hyperscalers reporting earnings tomorrow. I think it'll be a bit of a make or break moment for this market overall, because if these guys don't hold up the market and the investors aren't particularly happy with it, or there's no AI monetization growth, they don't like the CapEx numbers, the wind's blowing from the wrong direction, all that sort of stuff. We are at really elevated levels here at the moment, and it's going to be a pretty big job to justify sort of massive multiples, etc. With the looming effect of this, tariffs, uncertainty into the midterm elections, the shortages of chips, shortages of rack equipment, shortages of power, the Hormuz, etc. There's a lot going on at the moment. We did actually see, we saw equities drop off a little bit. Obviously here, 1.2 in the Russell, 1 in the Nasdaq, half in the S&P 500. Aussie market has been sort of leading the way down, as it does, but I mean, I've got to say, much more of an industrial and cyclical nature to our index, and a smaller tech sector. So, but I do think that there's optimism and then there's delusion, and I think the US investors at the moment are probably in the delusional category overall, just on the back of there are a lot of risks out there at the moment, and OpenAI was the poster boy of this AI. AI thematic starting up, and it's severed an exclusive agreement. Is now selling to Amazon as well as Microsoft. But Microsoft, I mean, I would imagine a company of that size and stature, who have been historically pretty litigious and pretty aggressive. If ChatGPT was that good, they'd be fighting for it, and they kind of didn't. So. Anthropic's the new popular kid in town, and it's the new prom queen, and we'll just sort of see how that sort of plays out. I mean, its revenue is going through the roof. It went from an annual run rate predicted in February of 9 billion to 30 billion in the last month. So yeah, I mean, look, there is money coming for it, but look, overall, back of the napkin numbers are that to justify all this capex spending, which is in the vicinity of $700 to $800 billion, we're going to have to see annual run rates around the 350 to 400 billion in revenue for the whole sector to start justifying it over the course of time. Obviously, how much you space that out, how much depreciation's involved, how quickly you've got to cycle your equipment, all comes into that. So, as I said, back of the napkin, not they're not verified stats, but you got to remember these hyperscalers as well have got really good underlying earnings. Google's got advertising, Meta's got advertising and data, Microsoft's got 365. These guys add. Amazon's got its normal stores, it's got its studios, it's got its cloud services. So if anyone can take a hit, it's these guys, and if it enhances their business overall and gets them ahead of their competitors, then you're probably willing to take the hit a little bit. Whether the shareholders will be willing to take the hit's a different matter, though, right? So. Gold, silver, copper, platinum, all in the the risk off basket at the moment. As in they've been considered as a bit of a risk asset. Crude pumped up got above $100 in WTI overnight. It's up 3.3%. We did have King Charles speak at Congress overnight. I wouldn't be surprised. There was a few things that were very targeted at President Trump over the course of that speech, and I heard it live, and there was rousing applause from both Republicans and Democrats on this as well. So it wouldn't surprise me if there's a little bit of internal backlash from the Republicans over the course of the coming week. It seemed to really embolden people. Like, I think people are very obviously politicians. Trump comes after you, so everyone's pretty afraid of him. But the king's the king. So you can't buy that, and he brought a bit of class back to Congress. Let me put it that way. It was a really good speech, and essentially, basically saying, whilst people will care what you say, in the end of the day, they really care what you do, and which is an Abraham Lincoln quote. And it was very well. It was a very well. Paced and not the normal classless crap that comes from the press secretary of the Trump administration or Trump himself. So yeah, Americans got a little bit of an insight into how a leader should probably behave, a little bit more presidential, a little bit more regal. These are the earnings tomorrow. Microsoft, Alphabet, Amazon, Meta platforms, they're all going to come out in one go. It is going to be pretty hard. I would definitely be around about the 9:30 mark tomorrow, trying to digest these things for the morning call. Look, it's pointing to this acceleration in spending to continue. Look, I mean, big four tech companies, capex surpassing 500 billion in 2026. It's pretty massive. That's just four companies. So you're going out on Elon and and everyone else. But supposedly Microsoft got a big Accenture contract recently, 70,000 licenses or something for Copilot. I don't know. Yeah, I don't know what they know that I don't. But we use multiple large language models here, everything from DeepSeek to Claude to Grok, all of the high end models. We've cancelled our OpenAI, our ChatGPT subscription. It's been in the poor performance category for quite some time. So I don't know. That's just us, but who knows? But yeah, Claude. I mean, each of them have their strengths and weaknesses, and many of the top of the line models are, don't necessarily. They just kind of do what they want to do, not what they don't follow instructions particularly well. So they're quite finicky. The older models are a little bit more refined. in terms of doing what you say from an agentic standpoint. But yeah, we'll Gemini I haven't had a lot of experience with, I've got to say, and the Meta AI is, it's a baby. It's not really anything in the realms of competing with those bigger names. So there is still some concerns around that mythos. The banks are kind of freaking out about it. It's its ability to pull these cybersecurity vulnerabilities, but yeah, but that's what I dare say CapEx will be the big thing tomorrow. AI monetization, probably some outlook, and that will largely be there. And all you've got really is Nvidia on, I believe, about 2 weeks away at least, I think. So it'll be interesting to see what sort of starts to come through there. So Apple then the following day, it'll be Friday morning. There's an update from ANZ Bank. ExxonMobil, I've got to say, traditional business oil company, if your ESG filters fit in, like I had this on the call on Ausbiz TV recently. It looks super cheap, and with oil prices lingering around up here, I can't see it's fairly stable. But I mean, balance sheet of just your fortress doesn't even describe it. So yeah, we've got we have CPI here in Australia today. It's going to be a bit of a disaster, near the 5% mark. RBA will be looking at trim mean around 3.5. Anything above that's probably going to get a rate hike. But we will see how things pan out. Then you've got FOMC tomorrow morning as well as leading into the Mag 7, the 4 of the Mag 7 reporting earnings, and then you've got GDP Thursday night, and then it is advanced GDP. So these numbers are a little bit loose. The preliminary numbers, it's got core PCE and things in it as well. So if you start to see any inflation or slowing growth there, that could affect the market as well. So loads on, basically. Not to mention Bank of England, Bank of Canada, blah, 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 blah. Yeah, it's a busy week. Which is pretty timely for us. I mean, we've been doing a fair few sort of hit and run things in our Global Alpha recommendation service. We got on G Vernova. We've got on a couple of other smaller earnings plays. You can go to Mosaic and get that recommendation service trial for a week. For a month if you like. But at the moment, where we see the market, quite like Goldman Sachs, going is, we're at elevated prices. The Iran-US conflict and the closure of the Strait of Hormuz is going to dent growth, increase inflation, etc. Over the coming months, we've got the midterm election coming up. So we want, whilst we're overall bullish on these thematics, like AI, and obviously believers in the Trump put, which is essentially, Trump's willingness to do anything, anything he can to, make sure the stock market's up and he ends his term, being able to say the stock market was up 70% under my watch. So essentially, overall, we want to buy the dip in the next 6 months. There's a really reliable statistic. Scan that QR code. There's a 5-minute video. There's also a PDF. This closes in around about 2.5 weeks. There is a discount for getting in before the end of May. It's It's about $1,000 discount per 100,000. So you want to get onto that as soon as possible and go through it. But yeah, overall, this buy the dip really reflects where our head's at. If you've got any index ETFs related to the US, FANG Plus, FANG, the hedged FANG, S&P 500. Index ETFs, it's a pretty compelling argument to switch to this. Much more capital efficient for basically the same result. So and it actually performs better in down markets as well. If you think AI is a bubble, but you want to have some index exposure, this thing will, you put down 17,000 for 100,000 exposure, but that's 17,000 is all that is at risk. Whereas if you bought $100,000 worth of ETFs, and the tech bubble happens again, you're down 50 grand, not 17. So it's a very good strategy, very timely, and it only sort of comes around every 4 years or so with this midterm election stats backing it up. So SPY will probably open a little bit lower, not a fair bit. But yeah, all eyes will be on the CPI number. Expected up 1.3, I believe. But overall, guys, have a great day, and we will speak again tomorrow.
Feeling lost with investing? Meet Mosaic. Mosaic is MPC Markets' platform that turns confusing markets into clear, actionable guidance for your portfolio. Discover Mosaic today. Portfolio and trade ideas in one place for clients and subscribers, powered by MPC Markets.